Hey guys, good evening everybody. Welcome to another edition of the AxesATrader.com weekend wrap-up show. Hope everybody is having a great weekend. Hopefully everybody had a great first trading week. The action, as you can tell, is actually getting very, very good. And most important thing is hopefully everybody, and this is kind of going back to our kind of year preview of how traders kind of really sensationalize that first couple of days of the year. And when they don't, and when they finally realize that they haven't done anything to kind of change their process or change their thinking or just overall approach. And as we talked about it last Sunday, it really is a very deflating area. And again, going into this year, I said to myself, I want to better myself, not by better on the process, just better myself, adding more more kind of, more chambers, more bullets into the chamber, more ways of putting stakes in the freezer. And, when we talked about the last couple of weeks about, me starting to trade more small cap stocks off daily charts. I'm not talking about the crap that people talk about on social media, but I'm talking about stocks that are trading off daily charts that you could potentially 2, 3, 4, 5-day hold them. And obviously complement that with the high beta stuff that we've been doing now for a very, very long time. It could be a very deadly combination, a very, very prosperous one. And that's kind of what I did. That was kind of my New Year's resolution, just add another dimension. So when one aspect of the market is very, very quiet, you could turn to the other. So for example, if you look at the FANG names for the last, you could make an argument for the last month and a half of 2016. You could turn around and say, well, they were pretty dead. They were. They obviously had their areas of interest. They'll have one day that Amazon is strong, and then the next day Amazon is dead, and then the next day Amazon is strong, and vice versa. But now we're starting to get to a very, very interesting area, and we'll talk about that in a second. So I really wanted to add another dimension, and as we can see by the first week of the year, it's actually been turning out very, very well. I've been holding the smaller cap names several days. The high beta stuff, I've been trying to trade for cash flow. Very, very good week because you started seeing the difference between the last 2 weeks of the year that the market was very, very lethargic, absolutely in a rush to do absolutely nothing because everybody was on vacation. So what we say all the time, wait till you get your premium hands. The premium hand obviously translated to people returning from their vacations. Liquidity came back into the market. The more and more market participants jolted in back into the game. Well, that's so you can see the translation into the action. The action was good. The action was very, very good. This week I put on four or five small cap stocks. Luckily, they all worked. And again, I was just looking to try to trade. Value off of daily charts. Nothing crazy, nothing out of its mind. But I ended the year, and I basically started the year with SFUN. I mean, you can tell. And again, this is what we talk about: looking for stocks that nobody's in, that are coming in value off the bottom. And nice little move on SFUN, and then slowly but surely throughout the week, I started trading a lot of the smaller cap names that did okay. I mean, they really did okay. BCRX was nice. BCRX was a nice little trade. And again, something I was holding for several days. You can see coming off of this area here. Unfortunately, on Friday was the only day I didn't hold it, and this one really finally broke over 7. But that was a good trade. PER, I'm still holding. I'm still holding. I bought it several days ago at 151. It's just kind of crawling where it needs to be. MIRN that I bought a couple of days ago. My average cost is 190. It spiked to 207 on Friday. We talked about this 209 level in the live webinar. This 209 was going to be the 100-day supply. So there was no shock that it stopped there. I took off a third at 207. So I locked in about 17 cents on third of my position. Hopefully it will get above this 210 level and start grinding towards that 250 level. Hopefully that will get there as well. The biggest miss by far on this week on the small cap space was I bought ETRM. Okay, I bought ETRM at $1.97. It was the first it was the first day that it had any volume. I mean, first day in volume. If you're just looking at this stock for the first time, you say, wait, what? You bought the stock at $1.97? Yeah, I bought the stock at $1.97 48 hours ago, right? 48 hours ago, and yeah, the stock went to almost $10. And unfortunately, this is really not my thing. This is not my thing. This is not something I'm thinking about. Well, stock lands a million shares. The stock can go to 10. You don't look at it that way. I look at things. Well, if the stock goes from $1.97 to $2.45, $2.50, you make sales. That's exactly what I did. And I never look back. I never look back. I bought the stock in $1.97, sold it at $2.45, the $2.45 area. I said to myself, how can you not take profits on that move until yada, yada, yada? You look back and the stock at $9.75 on Friday. But now at least I'm a little more tuned into these low float names. And if I do take one that's going to have a big move, well, it could have a big move. It could have a good move with me actually looking into it. I think there was a couple other small cap names that I traded this week. Was this GNVC I traded as well. I actually did okay with the small caps. I really picked and choose them. I bought this GNVC this week around at 349, kicked in the 70s. But again, I wasn't thinking these things could really explode. And again, when you look at it this way, well, that was probably right. But overall, pretty decent week with small caps. Again, I will definitely be trading them much more going into the new week. Going into the new week, I only have a couple of positions on the small caps. Again, PERI from the 151 level. So I'm going to hold on to that. Hopefully this thing gets into the 180s. And I am holding 2/3 of my position now on MIRN. From that 190 area. Hopefully this thing reclaims 210 and goes to 250. Let's talk about the real companies, right? Let's talk about the real stocks. So for the way I looked at it for years and years, so high beta went, so went the market, right? So high beta went, so went the market. And when you look at high beta, and again, you can look at all of them, but if you look at high beta, let's take, for example, Amazon, for example, stock did nothing. I mean, it really did nothing from about October, literally from October all the way to about 3 days ago. And we talked about this very, very important level here, this 383, 384 level. You can see exactly what happened here. You look at stocks again, like Google did nothing, did absolutely nothing for months and months and months, right? Like 3 months. We talked about that 817 level on Friday, and look what the stock did here. Tesla, same thing. And then again, this is by far my favorite stock to trade. Again, combination of speed and power. I traded it again on Friday. Did okay with it. But the most important part was years and years and years ago, you could turn around and say, so go the leader, so go the market. And unfortunately, when I'm looking at these FANGs and I'm looking at all these high beta stocks, for them, these things represent speculation capital. And when the market is looking, for example, at a stock like a dry ships instead of a stock like Google, it's kind of a head scratcher. But slowly but surely, and again, this is kind of a correlated effect. Once people started coming back, once fund managers started coming back after the holiday, New Year's holiday, you could see where the attention span went, and you're starting to see, in my opinion, the first leg of these stocks. So unless something materialistically, until something materialistically changes, right, and that could be a bad earnings report, look for heavier prices, look for higher prices on Tesla, on Google, on Amazon, on Netflix, on Facebook, on Priceline, because they were so beat up for such a long period of time. Again, if there's any type of euphoria, let's talk about segue quickly into the Dow 20,000, right? So Dow 20,000, if the harder we go into that area, the more these things are going to get bid up. So I'm looking very, very enthusiastic to trade these things coming into this week. So let's talk about the Dow 20,000, right? That psychological barrier that literally came in within 60, 70 cents, right? 60, 70 cents of hitting that 20,000 area, got faded a little bit off that area. Again, everybody in my circles that we were talking to about a month ago, we're talking about, well, you got to fade Dow 20,000. Is it really that big of a fade? Is it really that big of a trade? If you faded it on Friday, it gave you peanuts. It literally gave you peanuts, which basically tells you is not only is the market strong, the market is deflecting bad news, and you can deflect that bad news going into the unfortunate, horrific events again in Orlando. I really haven't read on it too much this week, and I don't know if they actually called it a terrorist attack, but now the market's starting to really deflect bad news as well. So if you're deflecting bad news and you're not selling off on a technical barrier, right, of Dow 20,000, it really does translate it does really translate into higher prices. Again, when you separate Wall Street and Main Street, you can see, Main Street's not acting great. You talk about big retailers like Macy's and Kohl's, results were down. Results fell short. It's not a great sentiment. It's not what the economy is screaming at us. However, if you talk to the Fed, it will tell you that the market and the economy is getting better. But when you look at the retailers like Macy's and Kohl's falling, short of expectations, well, the numbers dictate otherwise. So Main Street and Wall Street, always trades in a divergence. They're usually a trailing 6-month area of point of reference there. But for now, the market is strong, and unless we see a materialistic, kind of a hiccup. Okay, unless we see a materialistic hiccup in the markets, I expect more groups to get stronger and stronger. We talked about machinery stocks, such as Deere. I mean, look at a stock like Deere, right? Look at a stock like Deere. Again, people talk about it all the time. You might not know what NVIDIA does, right? But everybody knows what John Deere tractors are. You might not know, for example, what a Xilinx is, okay? But you're going to know what a Caterpillar is. So when you see these stocks and you see these companies starting to act well, and again, this kind of correlates into backs up the notion that we are slowly but surely getting off our training wheels. So going to this week, I'm bullish until the market tells me to be bearish. Well, I'm bullish, and again, bullish doesn't mean I'm going to be buying stock, and bearish doesn't mean I'm going to be selling stock. The market, again, for all you guys who joined this first time, I look at the market as an opportunistic point of view. Again, it's not a stock market anymore, it's a market of stocks. So we're looking at individual setups instead of a correlation of a broad statement. So going to this week, again, I am bullish until we're bearish, and we're bearish until we're bullish, and then things get kind of turn on a dime. But again, going to this week, I am bullish. I want to build up more inventory. For me, it's all about 2-3 days, 4 days. And once I see how the stock reacts within those 3 days, I make a determination if I want to keep it because of distribution, or the stock is just not doing anything on lighter volume. And I know if you're a new trader, it's kind of hard to try to figure out what's the difference. But when you've been watching order flow for since I'm 25 years old, I'm 42 right now, it's a much better, cleaner view of what your book should be warranted, whether you're keeping a position or selling it. But for me, in a perfect world, put on 10 positions, 5 of them work right away, 3 of them sit there, and 2 of them you have to figure out if you want to keep them or not. And you kind of rinse, repeat, trying to find the same exact setup. So let's get into the action, right? Let's get the action into TAR. So let's start off with the video, right? Do you guys remember, okay, and I started talking about this in the live webinar on Friday after the video got upgraded. Do you guys remember, actually, let me put up a chart on Amazon. Do you guys remember when Amazon was getting upgraded somewhere around here? Okay, if you guys remember, Amazon was getting upgraded somewhere around here, like 5 days in a row. $1,000 price target, followed by 1,100, by 1,200, by 1,300. Eventually, it got gassed out, and the last upgrade, it failed to rally, and the stock eventually, came in very, very aggressively. NVIDIA had a big run. Okay, NVIDIA had a big run, right? It had a very, very big run from 66 to 120, and then it went from 120 to 100, and then it got upgraded. You guys remember that? This was only 3-4 days ago. It got upgraded, and then the stock really did nothing. And then the next day got upgraded. And then the stock really did nothing. You look on Friday's action, and you could turn around and say, well, Dan, it got upgraded again with $120 price target. Stock was up $1 and change. Okay, you can make the argument the stock was up $1 and change. The way I look at it, it wasn't a lot of aggression there. It wasn't, acting like a stock that's upgraded 3-4 times in the same week. And now it's starting to bear flag. Okay, it's starting to bear flag. So the way I look at the market is, if you're telling me the market is up, right, and if I see the market down, that means the market is down. You can't fool my eyes. And the one thing I'm watching here, you have several upgrades in a row, but no price appreciation. Matter of fact, if you look at the last 3 days, all 3 days are lower highs, right? So it's bear flagging. The way I look at it, it's bear flagging. If the stock can't go up and upgrade, it means, well, what happens. So just in case, guys, just in case we have a back test this week, you don't need to wait for the 99.38. Look at the 60-minute channel on the video. Okay, look at the 60-minute channel on the video. Okay, here's the 60-minute. If you want to get super aggressive, okay, super aggressive, you could sell it below the 101. Everybody see this, guys? The low here is 101.05, right? And for the next several days, well, that was the low. 101.20. So, and you see the Bollinger Band rising above the 101 level. So I think if you see this thing getting very, very soft this week and starts breaking down the 101 level, I think you can that's a sneaky entry. I think it's a sneaky pivot, and then you could possibly see a move back down to the 99.38 level, and who knows what happens after. But definitely keep an eye on NVIDIA. Again, not something necessarily for Monday, but definitely keep an eye on it for the week, just in case that still plays out. Let's talk about the high data names, and then we'll talk about the small caps. I think Amazon, Google, eBay, INSEE, price. I think all these stocks are going higher. Look at Priceline again for all you option players. Keep an eye on Priceline. I haven't traded Priceline in a very, very long time. The equity trades with like a $2 to $3 range, very, very thin. So as soon as you put on the trade, you got $3. Yeah, no thanks, but no thanks. You can see here how this trend is about to really, really break. Right, this downtrend is really about to break. I think a break above this 1526, 1530 area should get a test of this 1566. So for all you guys who are trading, Priceline, especially on the option side, definitely keep an eye on Priceline. eBay, look at eBay, right? eBay looks really, really good. Finally came out of this range here. Finally came out of this whole supply over here. Put in a high on Friday of 31.16. Stock will close over 31.05. So break above 31.16. Keep an eye on, again, what is your risk? 10, 11 cents. So definitely keep an eye on eBay. INSEE looks really good. Keep an eye on INSEE, guys. Nice long distribution going back all the way, to the middle of November. So you're talking about here, guys, send alert on the 110 break. If the bios continue to be strong, this one looks very good. Definitely keep an eye on that. Google, again, big number came out on Friday, and congratulations to all you guys who did take Google on Friday. I was watching Google, Amazon, and Tesla. I traded Tesla and Amazon at the same time. Nice pushes, good trades. I miss Google. That's the one I really wanted. But again, when you're long Tesla and you're long Amazon at the same time, it's hard enough to manage those two, let alone put on a third one. And if the futures stall out, you can have a ugly matzo ball in your hand. But I traded Amazon and Tesla to the best of my ability. Good moves. The only problem was the futures stalled out and started coming in. I sold a little bit prematurely, but again, cash flow is cash flow. Nothing wrong with that. I'm pretty happy about the move. But keep an eye on Google, guys. There's two ways to play Google. Actually, three ways to play Google. The first one is obviously red to green. Again, I think Google is going to test this 837, 838 level. I think red to green, opening range high, or if you are very, very aggressive Google trader, you can trade this thing on a 60-minute support, right? 60-minute rising support. If it gets down to like the 819, 820 level, so definitely keep an eye on Google. Same thing with Amazon, exact same play. I think either red to green, opening range high, a break above, this 799.23 level, or again, if you were more aggressive, you could try to buy it off this rising support in case we get it back to somewhere around the 786, 788 level. So definitely keep an eye on that one as well. Tesla, look at the way Tesla is setting up here, guys. Look at the tight, look at the tight Bollinger Band right here. I think Tesla breaks this 30-31 area. I think the stock goes to 234. So I'm definitely keeping an eye on Tesla as well. So definitely keep an eye on that. Let's see what else I want to talk about. I think that's from the large cap stocks. And the small cap names that look pretty good, guys. CRTN looks interesting. Again, I have no idea what this is. Again, the key to watching, playing these small cap stocks, and the only way I play it, as you guys know, the only way I play small caps if I watch order flow and there's big volume. There's no other way I could trade them because there's no point for me to be in a trade that 90% of social media is trying to scalp for 2 cents. I want to get a move on this thing, and I want to see volume. So this one is dictating a story that big expansion volume, close over the 200-day moving average. I want to watch this thing. I want to watch this thing start basing above 118, 119, 120. Definitely keep an eye on this. Again, volume most of the time precedes price, so keep an eye on CRTN. ATOS. Again, for all those who are trading these small, low flow candidates, 2 million float, right? You have 2 million float, expanding volume. Again, you don't need a lot, man, for these things to move. Keep an eye on this thing. If this thing starts basing out, 168, 170, who knows, man? You could have lightning in a bottle. Again, I bought ATRM at 197, sold it at 245. This thing is almost a 10. Okay, so you can tell when it's your time to get a lotto ticket, it's your time. So definitely keep an eye on that one. SPCB looks interesting as well. Super comp, super comp. Anyway, first close over the 200-day moving average, 200 EMA. The high was 398, close at 388. I think a $4 break can get this thing going, so keep an eye on SPCB. And BIOC is another little bio name that looks pretty good. Again, watch the order flow, guys. Watch the order flow. I think probably a $1 break in this thing. Probably a $1 break on this thing will get this thing, 120, 125. You have a nickel risk for 20%, 25% return. Good risk reward, 5-to-1 risk reward on the trade there as well. Tomorrow morning, morning strategy kicks off at 9 a.m. Get there early. Again, a lot of things change between now and Monday morning. Again, the Bollingers expand or contract, the linears expand or contract. So we might have different levels there. So definitely get there earlier so we can discuss proper levels. So guys, have a great remainder of your Sunday. It's about 3 o'clock in the afternoon. Unfortunately, my son's Taekwondo scrimmage got canceled because of the weather. We had a nasty snowstorm last night. Unfortunately, some of the schools could just not make it. So I am home waiting for the Giants Packers game. Even though I am a Jets fan, unfortunately, gotta root for Big Blue. Gotta root for New York. All right, guys, have a great night, everybody. For those of you guys who are joining us tomorrow on the live webinar, the link goes out every single morning at 8 a.m. Eastern time, followed by 9 a.m. Eastern time for morning strategy. And for those part-time trader program signing up this week, video goes out Monday through Thursday, and obviously on Sunday. And also, when you sign up for the part-time trader program, you also get the PS60 theory 3-hour breakdown of what I believe in. Again, as you guys know, you guys got to see every single day, the most effective intraday tool you could possibly use. So plug. Anyway, guys, have a great weekend, everybody. Go Giants. And with God's help, I'll see you all tomorrow. Take care, guys. Have a great night.